All right, welcome back after a very tumultuous week in the markets. Kind of go over what happened this week and kind of what we're looking at for the week ahead. I already got a solid list built for the week ahead, but let's kind of see what's going on. So we talked about this 370 level a couple times in the past. That we'd probably pull back to it as like an emergency big pullback situation, and then probably make a move higher back up to all-time highs. Last week, I'm going to admit, I thought we were done about 385. That was a small pullback down to the 50 DMA. And then thought we'd move higher with a small bounce after that. I was wrong. The US 10-year yield just shook us again, took us down to about 371, 371 and a half in the S&P 500 and shot us right back up. We hit a bit of resistance today in the overall market, but really good buying power right here. Really large green candle for today. Good way to end a Friday. Not too terrible. With that being said, going into next week, we're going to be a little more hands-off, have smaller positions, tighter stops, take our profits more along the lines of 2-to-1, 3-to-1 versus our usual 5-to-1 risk ratio. If you are down in the markets, most people are. It's okay to be red. Just learn your lesson and let's grow from it. We're going to take a look at rates. We don't usually do this on these chats, but we can see the US 10 was 1.571, which is past that 1.5 mark we were looking at in the overall economy. Without going into super detail, the Federal Reserve says no more inflation. We're going to sit at zero inflation. It's not going to happen. We don't want it. But why the market reacts the way it is? Because investors don't believe that's going to happen. There's only so many tools the Federal Reserve has in their toolbox that they can utilize to take this market back to zero rates or keep them at zero rates. And if you don't know, bonds and stocks have inverse relationship. Bonds go up, stocks go down. Stocks go down, bonds go up. For the most part, a little more complicated than that. Other than that, things are mixed in the bond market today. Sector ETFs, everything was green for today, which is a good sign after what we've experienced the past few days. Don't get your hopes up. Still play on the defensive because we still got a lot of room for error here. DMAs are still looking good. You know, everything's pointing up except the 9 and looks like the 21-day moving average. But still in a bull market. We're not going to have a market crash. This is not a stock market crash. If you go back to even 2018 or even the beginning of 2020, like that was huge back in last March. Recency bias plays a role in what's going on as well. We're not going to hit this huge market crash. And even if we do, use a stop loss. Take yourself out of the trade quickly and quietly and live to trade another day. It's not the end of the world as long as you use risk management. The market's going to be around for a very, very long time. So what I was looking at this week, I believe, if I still have my week of, I think I deleted it. We'll take a look at what we have on the old lists for the 14th, about a month ago. See how that worked out. Any stocks on there that have broken out from that list. Amazon does not look good. It's a big thing with the tech sector right now, kind of just taking a nosedive. The FANG stocks are hurting. You know, Google is actually the only one that looks decent with a nice base forming right here under 2100. Could move higher. I would like to see another day of consolidation, but the thing likes to move when it wants to. Facebook still consolidating under 265, 264. 275. Could still see a move higher if it bounces up this 200 DMA. Baba, we tried to take that trade a few weeks ago. Did not work. Visa, all bank stocks are really strong here lately. The past week with their earnings and everything like that. We're actually almost at all-time highs. It's really pulled back 15 points, 5 points from all-time highs. So could see a move higher, especially if it retests 220 again. Longer term stock, in my opinion. I usually don't trade bank stocks. Same thing for MasterCard. 368. Looking at Home Depot, you would think this one led during coronavirus quarantine, had a lot of people doing their own DIY experiments at home, keeping the stock lifted with all the sales that were coming in. Give me just 1 second, guys. All right, sorry about that. Netflix still upwards through 555, looks strong. Earnings are strong. A lot of competition in this industry. I'm kind of losing a little bit of faith in Netflix. I personally use a few different services for streaming when I do want to stream, and Netflix seems to be kind of losing ground. Their originals are pretty good, but I don't think they have a lot of footing. Peacock and NBC are really, crushing that market right now, especially since taking The Office. Adobe looked good, crushed through that 200 DMA. We're going to give that one a lot of time to work itself out. Not coming back anytime soon for a trade. Danaher looks good, bouncing off support this base that was over here. Very, very nice base that it broke out of back in September. Really retesting it, kind of stuck in this range between 245 and 210. McDonald's still close to 215. Breakout if it can ever get to it. Oof. Yeah, had a good chart pattern forming at one point around 17, just under 17, if it would have just stayed moving sideways. But this thing is blown, just smoked, not going anywhere for a while. AMD, the fundamental aspect of this one has a lot to do with the shortage in microchip stocks. Could easily come back up 86. Not too much on this one. Honestly, don't understand why I put this on here. May have been a typo. Don't really like the way the stock looks. It's way off highs. Like, that's not a stock I usually look at, so I'm not sure why that one's on our list this for the 214. Melly breakout. I remember this one. It's $500 off of highs. That is insane to me. That is one heck of a pullback. Depending on what your strategy is, that 200 DMA looks like a great place to dollar cost average, or DCA. This company has some pretty solid earnings potential growth year over year, just growing almost 100%. Same thing for quarterly, just straight shooting up. It's a hard stock to get into right now. I don't see any technical indicators that would be like, yes, buy this stock. Fundamentally, sure, but I'm not a fundamental trader. VALE, nice base still forming. Really good pattern here. Still a very healthy stock. I'm just going to write that one down. Take a look at this one a little further. So with VALE, it's a sub $20 stock. We look at earnings quarterly and yearly. Solid growth potential right here. More financials. We'll take a look at the overall business structure, business fundamentals. Sorry. It's been a long week. I have been working nonstop on charts and stocks and risk management on these positions. So if I sound a little tired, I do apologize. It's still a solid company. Not exactly sure what they do. If anybody knows really what their business is about, let's see. Do they have a website? Yeah. Okay. Well, we're gonna go anyway. Breaking the internet rules here. So, is there U.S.? Looks like an international company, but not based in the U.S. We'll check out Canada. They're the closest neighbors we have. It's a mining company. Yeah, logistics company. So good-looking company, good-looking stock, smaller stock, but I mean that pattern looks really good. So if you're a technical trader, I could see that one as strong potential. CCI, not good. Southern, if it would have stayed in that range, it would have been a good, nice little support trade, but not looking good after this week. Spotify was one of my favorite stocks, and I hate favoriting stocks, but still if it can stay above this 200 DMA, we'll look good for a retest of highs here shortly. But it's really high off high, really far off highs, almost 30%. So we're just going to leave that one as is. Just something fun to look at. Amazon, we just looked at that one. So, okay, so that was the week of 214. Everything looks like it's tanking on that list. So I'm going to go ahead and delete that once we get over to 228. 221, just kidding. All right, so we looked at Baba. Groupon was one that I saw the other day. It just took off, just crazy. 221. Groupon was that pattern was just very, very specific and unique. I did not like how close it was to earnings for me to trade it personally. But if anybody got in on that from my newsletter, this stock took off. Like that's almost 100% gain in less than a couple weeks, like 2 weeks. So congratulations if that was one of your trades you took. SYY, not close enough to highs for me to be interested in. Oops, I just deleted that without looking at it. My bad. Cyber was a great looking stock. Would have loved for that one to continue with its bull flag pattern, but got hammered during this past week with the rates and everything like that. And that was one of the biggest aspects of it. The tech sector just really got hammered for some reason. Just FANG stocks in general just crushed. So we're going to not even look at that one for a while. Tenet Healthcare, still long-term. If you would have bought $50 breakout or $51 breakout like was in the newsletter, you would have gotten pretty good returns so far. And it's very strong right now. The healthcare sector looks really good. Nothing really getting slammed over there. I mean, if you look at this, if you had this stock and you were waiting out during this whole week or past freaking 2 weeks almost, you're not looking very damaged right now. Your account looks pretty good. So THC was good. WRK, this one I don't remember looking at as a trade. I know that sounds really bad, but it looked like it was close to highs. Not at all, actually. It doesn't really have a pattern. If we can continue going up, form a flagpole again, and get some consolidation sideways, see a little bull flag pattern appear. But other than that, I'm going to avoid for now. This one is close to high. Synchrony Financial. I'm looking at this one currently. Again, bank stock, not a big fan of them just because of how slowly they move. Synchrony is a larger or smaller bank. A lot of crediting and debt financing. Not a lot of income potential right now. Growth has kind of slowed down. Looks like that. I don't see any. This is a strong buy. I mean, technical pattern looks good. But other than that, I mean, the technical aspect of it looks good. But that's all I could really justify for that trade. I saw that earlier when I was scanning and decided to avoid for the time being. GNTX, these are just sloppy patterns I don't like at all. That one's close to highs, but I mean, it's not gonna matter to us really. LGF.A, Lionsgate, called this one out, was in this one, took profits pretty quick. $15 breakout, up 15, 20% just about. Not 20%, I'm so sorry. 15%, 10%, whatever you want to call it. How about that? That was another one that was in our newsletter that we had break out. Facebook, covered that one. Flow, this is one that's been tricky. This is a huge support level at 22. Looked like it was going to give it up. It held up incredibly well, almost exactly inverse of what the overall market was doing. Flowers.com, or Flowers Food, not Flowers.com. But I was looking at it as a short potential play, but it decided to go the opposite way. I never entered this trade because it didn't meet all my qualifications to actually short. it would have had to break down pretty high volume through 22, which it did not. Ashland Global Holdings, close to highs. Not too bad of a technical pattern. Do like it. It's looks like this is a major level of resistance right here around 87. I'm gonna kind of check out the weekly pattern on this one, weekly chart, see where we're at prospectively. Yeah, so this is actually a pretty valid trade. Could see this one going higher. Let's check out financials really quick. This might take a little bit of extra volume to get through, but overall looks good, especially after today. Held up really nice on moving averages. Let's see. Oof. Losing money. Losing earnings, at least. Not really reinvesting that properly. Global holdings or not making some right decisions. Still a valid technical play. I would use it shorter term. Not meeting my standards for fundamental earnings growth. CCK, Crown Holdings, no. I always get that confused with like Crown Forklifts, but not enough near highs. This is a long watch list. Let's see. Unless I already went through it. Looks like I already went through it, maybe. Got a lot to go. All right. We got time. McDonald's, covered that one. HUN. Afria, I mean, this one looked good. I even bought into this. I was looking for the break of 20 to go higher. It is just way too high, far off highs for me. You know, I break my strategy every now and then just thinking I have the oomph to make those work, and I forced this trade and got stopped out pretty quick. Visa again. See, I have a lot of repeat on these watch lists. I kind of go through them looking for the right trades. CLVT, that got slammed really bad off earnings. I'm going to avoid that one for a long time. Avoid. TEL, this one is looking good for next week, most likely. So if you guys keep an eye on this one, this 130 break, I think, let me see, 132. We'll aim for 132 break just to give us a little bit of space between where it was today and where it may go next week. We're wanting to see it crush through highs, if possible. And let's see, earnings I think are pretty solid on this one. Yeah, pretty balanced. Growth is pretty stable. But this thing trends really, really nicely on the 9 DMA. Adaptive, avoid, very, very hard fall there. Fall from grace. MasterCard, covered that. KSU. CCIV, this is one that really messed a lot of people up. This is a SPAC. People got involved with the SPAC bubble, got caught up in the gains. I got caught up in it because I had a vertical put on it and just lost like $2,500 on this trade. So be careful when it comes to these SPACs right now because we're almost in a bubble. Well, you could even say we're in a bubble with it right now. They're just popping up all over the place. Unless they have a great game plan and you know what they're merging into, and you've looked at that company, because they are going to be private held companies, so there's not going to be tons of paperwork on them until they get bought out with their M&A, or until they're about to get bought out. Snapchat had a really strong uptrend since earnings back in October. Right now, not a buy. Close to highs, though, so we're looking pretty good. It's almost 20% off highs. QS, not a good play right now. ECL, stuck in a range. MCO Moody's, this one was a good one. This was on a list. I remember wanting to trade this one. Just that consolidation is so just jam-packed right now, or was under 282, and it's going to be stuck in the range. It might bounce off 295. It's going to have struggle getting upwards through 300, but keep an eye on it. Could make a solid move in the near future. It's too late to get in on it right now. Don't go buying it at this point. If I were in this right now, I'd still move my stop loss up to break even. One more second. All right, Penn National Gaming. Oh, nope, that Penumbra. The wrong one. Penn National Gaming was a good one. Strong pullback right now. Didn't really find anything interesting on it. Not a good option currently. It's just going to take some time to work out its fall. We'll take a look at that here in a little bit. Show you some trades I took this week that kind of got stopped out, including DraftKings, which I made some money on, but lost a little bit as well. Wayfair still looks good. Very nice consolidation. Maybe a few more days for a move through 300. But overall, Wayfair looks pretty solid. Held up really nicely after its breakout a few days ago. So don't be afraid of those retests. VIR. I don't know why that one was on there. No. We were looking at move through higher, but it's 100% off highs. And then again, boom. All right, so winners from that week are Groupon, for sure. That was one of the best trades for that week. It only takes a few of those to set you up for the year, to be honest. Let's see. So we'll take a look at Dkng. Dkng, so what my game plan for this stock was when I first traded it was I was going to buy the 63 break, which I bought 300 or 400 shares of that break. I took it all the way to the top, to almost 72.50. I sold most of it before it hit that top. I had about 50 or 100 shares left. I think, yeah, I sold almost all of them except 50 shares. Pulled back. I waited it out because I thought this pullback was going to be very temporary. Pulled back even further, stopped me out of everything at the break at 62, at 63.99. I got stopped out of the rest of my shares. And then yesterday, when I saw some buying on the overall indices, decided to jump back in again, broke my strategy, caught a falling knife, and then today got stopped out this morning at 59.99, taking away most of my gains. So I came out with like $150 profit on that one, so like literally nothing. Kind of wasted time, wasting my clock here. But overall, you can see the price action, really strong earnings, great company, consolidated all earnings day too. So when you see that, right with those moving averages all bunched up, and then poof, move higher. Another one, ESI. ESI stopped me out. I actually just entered this trade again today just to see how it would react on Monday. Only got in with half of what I got in during last week. With the market strength coming back, I really want to see where this one is going to take us next week. Want to just aim for a 2-to-1, 3-to-1 risk reward on this guy, and then we'll bounce out of this trade. One of my trades for next week that's going to look really solid, PayX. PayX through 92. It's not too late to get in this trade, although it might be just a little bit. Consolidation is nice. If you're not afraid to risk 10, 15 cents on a trade, go ahead and just snag it up. I think it's a great trade. It looks pretty solid. Consolidation is nice. Could see a move higher. Not looking for $100 price touch here. Going for a quick, maybe 3, 4, 5-point move. Then I'm out of this trade. Overall, shaky market right now. Nothing too crazy. Don't want to put on too much risk. We could move lower. You never know. All right, guys. If anybody has any questions for me in chat, go ahead and shoot them towards me, and I can get those answered for you guys. All right, guys, y'all take care. Safe trading and trade smart. Don't take on too much risk. Use a stop loss.